So welcome everybody, it's Stuart here from Hot Forex to another one of our live webinars. Today it's all about, I've titled it Putting It All Together, Entry, Target, Stop Loss, Risk and Money Management. Those of you that heard me talk before will not hear anything new because trading hasn't changed over the years, hundreds of years, and we'll look into that and we'll talk more about that today. So hopefully lots of questions, and I'll put up some bullet points about how I trade and my system. We'll take it from there. Basically, we can go through the setup and searching for trades and stuff like that. Okay, so before we get going, obviously I need to run through the some admin. Obviously, yesterday's those of you that were here, the audio was designed to trip us up yesterday. But any questions or things I don't cover in the actual session today, please email me at webinars@hotforex.com and we'll get back to you as quickly as we can. I'm actually away from the office from tonight for about a week and a half. We're doing some seminars in Africa. So those of you that are in Africa, hopefully we'll get to meet you. Nigeria and or Lagos in Nigeria and 3 cities in South Africa over the next few weeks. So really looking forward to that. So my email may be a bit a bit less responsive than normal. But before we get going, let me read the disclaimer. This material is provided as a general marketing communication for information purposes only and does not constitute independent investment research. Nothing in this communication should be considered investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in FX and CFD product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our written permission. Okay, so that's the admin out of the way. So those of you that are new in here, is this a first time webinar for anybody? I won't waste time running through boring you with who I am, because I'm going to talk about a lot of this again anyway. Basically, my background, I've done lots of different things in my life. Principally, it was spent most of it in the City of London working for retail and investment banks. I also worked in telecoms and ran my own consultancy. But I've been investing and trading my own money since 1997, September 1997. It was money that I'd earned. I wasn't given any money, and so it was important to me and my family. And I learned, three or four key things over that time. Well, before this, it didn't take 20 years to learn these 4 things. But do what's probable, keep it simple, look multiple time frames, and most importantly, know yourself. I'll talk a bit about that today. Yes, this is being recorded and sent out. Yesterday's recording didn't actually work in the end after all that carry on we had yesterday, but I'll run through some things we talked about yesterday as well today. Ahmed is a guy that's asked that. Okay, so there you go. Today we're going to look at finding, entering, no trade, putting all this thing together. How do I do it? What do I do? Okay, I'm not going to tell you what my system is, but I'm just going to go through how my approach. And it's not really about systems. It's not really about technical analysis, fundamental analysis. It's very much a psychological business, this. So we'll look at targets, look at stop losses, and again, I keep it fairly simple. Risk management is absolutely vital, absolutely key, and that's where lots of people come unstuck. They risk too much, and their lot size is far too big for the size of their account, and they don't understand some of the basics, and that's very, very important. Okay, and as simple as that. And any questions you may have. Okay, so fire away all the time. I'll bring in the MT4 platform as well. I'll show you some examples of those of you who weren't here yesterday, trades we took, trades we didn't take, successes, losers, winners. It's all there. So 5 key things or 4 key things if you want to get off first base when you put it all together. Because if you think of trying to hit a home run in baseball vernacular, baseball speak, you want the pitcher doesn't want you to hit a home run. The market doesn't want you to hit a home run. You want to hit a home run. So you've got to go through, be able to write these 4 things down and accept them all. Okay, so what I would suggest to you very, very strongly, this is all about you. You know, it's not about me. It's not about some robot or some algo or your friends or your trading mentor. It's all about you. Okay, understanding yourself, understanding that this is a risk-based business, but most things in life have risk, I'll say. So the idea is to mitigate the risk, reduce the risk. Okay, and first and foremost, you've got to look yourself in the mirror and say, can I accept losing? Because trading, unlike any other business, you can be successful, you can make money at the end of the year, the end of the month, and you can still get things wrong an awful lot of the time. You know, 50, 40, 60% of the time, well, 40, 50% of the time, certainly you can get things wrong, but still make money. So again, just think about that in your own line of business. If you're in business, could you get things wrong 50% of the time and still make money? If you're an accountant, if you're an airline pilot, if you're a nurse or a doctor, if you're a student at college, you know, 50% is not a great mark, is it? It's not too bad, but these days, but it's not a great mark, is it? You'd want to do better than that. So with this crazy business, because of the way it's set up, and if you manage your risk, if you manage your risk properly, you can still make a return on that. And I talk a lot about that in the Mind Game webinar. So it's all about you. It's all about a system. You know, automate things as much as possible, as Mr. Balak said in our video the other day. System, but it's all about discipline and patience. Okay, we're not, as human beings, we're not designed to be disciplined. We're not designed to be patient, especially these days. But if it's a skill you haven't got, it's a skill you can learn. Okay, because the market will teach you that more than anything. And the most difficult way the market does that is taking your money away from you, and that's a hard lesson to learn. But it certainly focuses the mind. And the other thing, instead of coming into this business to think about making money, what you really want to do is turn it on its head and think about the money you've invested in your trading account. You want to protect it at all cost. Okay, so don't risk too much of it at any one time. Don't overexpose it to the market at volatile times. Protect your capital, because wherever you got it from, it's yours. Okay, so you need to protect it and look after it. So don't risk too much of it. Obviously, you need to risk some of it to speculate to get some back, but don't over risk. Manage your risk all the time. You also need to understand some simple numbers about how this business works in percentage terms. So think about it in percentage rather than in sort of dollar terms. So whatever the size of your account, whether it's 5,000, 50,000 or 500,000, think about percentage returns. Obviously, the more you invest, the easier it is, because the money comes to money in this business. So the more you invest, the more you can make, more you in pure dollar terms. But about the percentage terms, if you can if you can make a 20-30% profit on a $500 account, you can do that with a 5,000, with a 50,000, with a 500,000 pound account, or dollar account, because it's exactly the same. Again, it's all about psychology. It's all about understanding yourself and getting consistent and confident. Consistency breeds confidence, and you just repeat the same thing, because the market repeats itself day in, day out, week in, week out, year in, year out. It hasn't changed, and it won't change. But you do need to understand that third point there, understand the basics. So you absolutely need to understand what leverage is and what it means for you, what margin is, and when brokers move require more margin because of certain volatile events, you need to understand what that means, or when they reduce their margin levels on certain assets, what that means to you. Understand how that affects your account, so understand the basics. Again, if you don't understand the basics, stop now, go backwards and reacquaint yourself with leverage and margin and account size and all that sort of thing. Those of you that heard me talk before, I bang on about these two books all the time. Read Reminiscences of a Stock Operator by Edwin Lever, and read Trading in the Zone by Mark Douglas. Mark Douglas, Trading in the Zone, talks about the psychology of trading, And the reminiscences is a story of a guy called Jesse Livermore, and it's got some just great anecdotes in there about, this is a real guy back in the turn of the 20th century. He made and lost a fortune, hundreds of thousands of dollars, back at the turn of the century, three times. He started as a boy plunger, they called him, at 14, and by 21 or 22 he'd made $50,000, $100,000. Fascinating book, and I've read it many times, and that's what I would recommend you do. So try and get those books. They're available on Amazon. They're available as downloads, I think, and they're old, but they work. And the market, hasn't changed. So, what you're all waiting there for is what I would do. I'm not allowed to tell you what to do. It's not part of our remit here, but I can show you on a demo account what I do. So, this is what I do with my own trading. Okay, I only trade typically on daily candles, so I'm not particularly interested about what's going on during the day. Okay, this is just me. That's because of the way I'm psychologically built. A lot of you out there will be wanting to, be scalpers, have a different approach to things, wanting to close their account and not have any risk open overnight. Well, that's fine, but you need to understand that if that's how you function, that's great. So you'll want to take more trades during the day, shorter duration, obviously shorter pip counts, and shorter stop losses and shorter targets. I typically look at about 30 something charts altogether. So it's the 8 major FX pairs or crosses. So the dollar, the euro, Swiss franc, the Aussie, the Canadian, the New Zealand dollar, the euro and the pound. Okay, I tend not to look at any exotic currencies although I occasionally do. I said that I looked at the South African rand occasionally and the Turkish lira occasionally as well. I'm interested in oil, so I look at the two oil, both Brent and WTI, so US oil and UK oil. I look at the commodities. 3 main commodities I trade are gold, silver, and to a lesser extent copper. I like stocks. I don't tend to trade individual stocks at the moment, but I'll trade the index. So I'll trade the Dow, the S&P 500, the UK, and the DAX at the moment. I'm looking to add perhaps the Japanese and Chinese stock market indexes as well. At the end of the day, usually midnight, actually more importantly, it's more typically early in the morning, I will scan those 40 odd charts manually or with an automatic scanner I've got, and if it triggers a trade, I will take it. If it doesn't, I won't. So I'll normally do it late at the evening after the market's closed at midnight or 10 o'clock UK time, or early in the morning typically. My wife's a teacher, she gets up very early here in Cyprus, so I tend to do it in the morning, to be honest. And then I'll enter that trade. And most importantly, I've called it my leave it alone basis. So I'll have an entry point, I'll have my target worked out, which I'll come on to in a minute. I have my stop loss worked out, and again I'll come on to that in a minute. It's very straightforward. And I set and forget, or leave it alone as I call it, because all my system has done all the scanning, all the thought has gone into the system, and all the brain work has happened before. So I'm happy with it, I'm comfortable with it, I know it wins overall over time. I'll show you what the results we get. And so I'm happy to, if I lose, I lose. If I win, I win. And again, that's a very significant psychological approach that you've got to learn yourself, and you've got to learn to accept. Always trade with a stop loss, and always trade with a take profit. I'm not going to go into the wheres and wherefores of that today, but it's something I always do, because again, it takes all the stress and all the emotion out of it. Emotion kills trading, or good trading. Fear and greed are the two key components of the market. The market gets very greedy, the market gets very fearful. Too greedy, and it's got to come down. Too fearful, it's got to go up. If everybody's long, there's nobody left to buy, it's got to go down. If everybody's selling, there's no one left to buy, to buy it, so it's got to go, to sell it, so it's got to go up. and that's always been the case, up and down and sideways. So stop loss, take profit. Probably the most important thing after understanding yourself and the psychology of the market is understand risk management. Never ever risk too much of your account. I always say to beginners, or even people that have got much experience but not much money in their account, or they've emptied their account or they've lost money, start with a small amount. Start with a demo account. Start with paper trading. Start with micro lots. That's why we have micro lots here at Hot Forex. But be happy with a one, and think of it in percentages. So think of it as a 1% loss. So if your trade's going to lose 1% of your account, that's fine, because that means simply that you can get 100 trades wrong before you empty your account. If you're risking 20% on a trade where your stop loss is, or you haven't even got a stop loss and you're letting it get bigger and bigger, you only get 4 or 5 chances before you empty your account. So stop loss, take profit, vital. Risk management, even more important. So try and keep that risk down to 1 or 2% of your account. I've got some hard slides in a minute which go through that. Okay, and when I post that if we have a target 1 and target 2, I tend to take 80% of the profit or at target 1 and 20% let 20% of it run to target 2. So that's just some of the rules that I trade by. Okay, my system is based on I call it energy, turning points and trends. It's a trend following system or a trend breaking system, and I'm looking for energy in that market. And I talk about this a lot because Fibonacci is based on levels that are in nature and they're applied to the financial markets. Lots and lots of indicators have their base, mathematical indicators, mathematical algorithms still have their basis in nature. And so the market, for me, having stared at the charts for many years, you see this natural energy in the market. So you'll see it going to natural levels, and they tend to be these support and resistance levels. So it's based on energy and momentum, turning points, i.e. running out of energy, pivot highs, pivot lows, if you've watched any of our other webinars, and it's a trend following system. So it's rules based, and most importantly it's non-discretionary. That means I don't interfere with it. Every time I interfere with it, it's not worth it. I've tried. It's just let it happen, let it go. Have sufficient capital in your account to let it get to these targets and get to these stop loss, because it's just part of the business. Sorry, I've got some questions here. Is pound a good one to trade? Yes, pound. The cable is a very good one to trade, Cowell. So when I talk about the 8, sorry, let me just go back to these 40, or I think it's about 38 at the moment. So when I'm talking about the 8 FX majors, I mean, let me see if I can add a little. Sorry, I didn't mean to do that. Where are we? This one. So it's all the ones you could. I was going to write on the screen. So it's pound against all the other. So it's pound against the CAD, it's the Aussie, the New Zealand, the US dollar, Swiss franc, and it's the same with all the others. So it's the dollar against all the other majors. So those 8 major currencies: the US dollar, the euro, the yen, the British pound, the Aussie dollar, the Canadian dollar. What is that? New Zealand dollar and the Swiss franc. Those 8 against each other. Okay, so there's those. I can't remember when that comes to. 2 oil positions, 3 commodities, and at the moment 1, 2, 3, 4 indexes. Okay. What's that? Somebody's asking, is GMT Surfer daily scan? So sorry, that time on there is the server time. My system was based, and I wrote it in I've got it going in the UK, so it's based on UK time, so it's 10 o'clock UK time when the candle closes. But this is server time. Don't worry too much about the times, Libby. It's just that's the end of the day. How do you do that on a MetaTrader 4? Get out with only 80%. Right, Cowell, I will break. That's a good question. Many people have asked that. So this two target policy here. with the MT4 platform, what I will tend to do, because it's a day trade, I'm not that bothered about getting in exactly at a certain pip level. It's a bit more difficult, obviously, if you're trading intraday and every pip counts. So I will tend to open, let's assume it's one lot. Let's assume that my risk is one fixed lot. So instead of using one fixed lot for one target, I will use 0.8, and then immediately afterwards, like split second later, or as quickly as I can, I'll open another one at 0.2. Okay, so that keeps my exposure to one lot, if it was one lot on that particular trade. Hope that makes sense. Okay. Don't you risk free your trades if something strange happened, or you still leave it alone, Babek? Babek, I tend to leave things alone. Yes, the leave alone approach. Again, over the doing this for 20 years, interfering has always caught me out. Thinking about or trying to anticipate something. Again, that's the beauty of trading with more technically or more of the charts. The news, the pure technician, the pure chartist would say the news is all built into the chart, and it doesn't matter what Mr. Trump says or Mrs. Merkel says, or what anybody says. So it's the price action only. I don't agree with that completely, but so I tend to leave it alone. Yes, sometimes, if I've got a big long stop loss and it's clearly not going to turn around, sometimes I will close it before it actually gets to the stop loss. But more often than not, probably 90% of the time, I will leave it to hit its stop loss, because that's just how I keep my system update. I am looking at perhaps tweaking it a bit for that situation where it's clearly not going to turn around, or it's looked like, so it gets me out before it hits the stop loss, but I haven't fiddled with it yet. So how do you set a take profit using the 14 period ATR? I'll come on to that in a minute. Is TradingView good for chart analysis? I don't know. I don't know TradingView. Is that the new guys? I think so. I think TradingView is the one where you got free charts, isn't it? I don't know, but I'm very good for chart analysis thing, so stick with us here. So I hope that's answered your questions. Okay, so keep them coming in. The questions are great. Where was I? Yes, energy-based system, rules-based, non-discretionary. It means that I'd leave it alone. So typically, this isn't exactly, but if you see come to any of our live trading events, you'll hear me talking about the 20-day simple moving average. That's the middle of the Bollinger Band. So on Bollinger Bands, tend to be set at 2 and 20 or 2.5 and 20, and I tend to look for either close to it or it's already breached it, it's gone through it, or it's broken it and it's off and it's generated the energy. So for my target setting, I simply use the 14-day ATR. So I'll bring that in a minute when I bring in the trading platform. It's just a standard setting that's in the MT4 platform, and again I'll look at that number and I'll add it to the entry point and I'll see where it gets to. More often than not, it'll be close to a round number. I really, really like round numbers, and when I say that, I mean things like zeros and fives, because the market tends to go to those numbers. Why does the market tend to go to those numbers? Because the market's driven by people, regardless of what we're hearing on the news all the time about artificial intelligence, and yes, someday it will take over, and computer learning is fantastic. And Dennis Asapis, son of a Cypriot in England, who set up Mind. He's been taken over by Google now. Anyway, it's a story for another day. But that will take over eventually, and it will be applied to financial systems. I'm absolutely sure, and I'm sure it's been applied to financial systems now. But for now, it's an emotionally driven business, money, and so people get fearful, they get greedy. So even the best programmers in the world have emotions, and so they still press the buy and the sell button too quickly or too slowly. Anyway, I'm getting off the point, which I tend to do. Sorry. So 14-day ATR for targets, and the stop loss, quite simply, has to be where the stop loss has to be. Okay, let me say that again. The stop loss for me has to be where the stop loss has to be. So it's typically simply below, because it's a trend following system, simply below the latest high or low. So if the stop loss is huge, 300 pips, 200 pips, and my target is only 150 pips or 130 pips, do I take that trade? Probably. So that's rubbish for risk reward, isn't it? But my system has shown me over the years that those with the big stop loss tend to hit target more often than not. So that throws that risk reward rule out the window sometimes. But that's because it's the real world. Risk, when I'm teaching people or showing people how to trade, I always try to say you need a risk reward of at least 1. Some people say you need a risk reward of 3 to 1. Risk 100 pips to win 300 pips. That's great if you can find them, and you can find them in the forex market because the forex market trends very well. Faisal, what do you mean by an open position on a leave alone basis? Right, so sorry, I perhaps haven't written that very well, Faisal. Let me just go back. Oops. Backwards, not forwards. So this is just the steps I go through, Faisal. Sorry, I perhaps haven't explained this very well. So at 6:30 in the morning, I've scanned my 40 charts, and it's come up with 5 or 6 options. So I will then have a look at it physically. So I'll have a long list of 5 or 6 or 10 or 12. I will see if it feels right, if it looks right, and my system is quite right all the time, so I tend to do it. So I'll open the position and leave it alone. So I'll open it at the price it is then, or the price it's suggesting we should be getting in at, and I will then put a take profit and a stop loss, and that's what I mean by leave alone. Faisal, I hope that makes sense. Okay. Where was I? Yeah, so stop loss has to be where the stop loss has to be. So sometimes the risk reward goes out the window, and you'll see that in some of the positions I take. But that's just what has worked for me over the years. Occasionally, I say it's a non-discretionary system. Don't fiddle with it. But sometimes I'll also add to the charts, a manual support and resistance level, because more often than not, my system's based around sort of support and resistance. That's the key thing to it. Fibonacci levels are, bizarrely accurate. Lots of people use them because they're straightforward, and they're fitting quite well. I like fractals, I like RSI, I like the parabolic SAR as well. The simple technical indicators, to be honest. I understand MACD. I like Elliott wave, but I don't use them. I'm not great fans of them, to be honest. But it's just what works for me. Ichimoku, yes, it's a great system, Cowell, and it's ancient and it's worked. The Japanese are some of the world's best traders, and many millions of people trade in Japan, but it's not something I've used, to be honest. But I understand its power, and it's very millions of people literally use it. So it's a great system. You've got 6 things all combined into one system there, understanding the cloud and all the rest of it, and the key numbers, 28s and 14s. Great system, but it's not something I use, Cowell, to be perfectly honest. So that's why I'm saying it's all about you. Right at the beginning, it's all about finding something that works for you, works for your time frames. As I say, I wait till the end of the day. I'm not interested in what's going on during the day for me. But if you're a scalper, you want to know, you want to be looking at the 1 minute or the 5 minute chart, so you can apply the same rules, but you just got to be in and out quicker. You can't have 1 and 2. You wouldn't have a target 1 and a target 2 on a 5 minute chart, because by the time you'd entered it, if you're looking for 5 pips, it could all be over by then. So it's all about you, all about finding a system that works for you, and that fits with your personality as well. More importantly, because it's all about emotional control. So how do we do? Well, this is an update just from yesterday. Actually, the orange one. Those of you who were here yesterday saw this chart. These are just the orange things that have happened overnight. So the orange ones are trades that are completed overnight. In yesterday's webinar, we took these 1, 2, 3, 4, 5 positions based on the close. So yesterday was Tuesday. Yes, it's Wednesday today, isn't it? So this was based on the close of the candles on Monday night, and these were the triggers that triggered for me on these particular pairs. The white ones here on Monday night, and the orange one here, the Dow, with its sentiment, its energy, hit its target that we'd set yesterday or Monday, and 250 points, or 2,500 pips if I was being accurate there, because this is traded to the point cent here on our platform. So it works. Over time, there's 180 trades here closed. We've got a 70% win rate, 30% loss rate, and it works for me. It fits with my time scale. And these are all obviously all my trades. These are the ones I've simply posted to our analysis page, our website, based on the system that I use. So as you can see, some of them are not all daily ones. I've been asked to look at shorter term frame series, and I've got a 4-hour system as well that seems to be doing okay, and a 1-hour system as well, but based very much on the principles I've just talked about. Okay. What time does the daily candle close? Well, midnight on the, let's bring that in. Okay, so I think, have I got another? I won't show, I'll put some other slides here about, it's a bit more complicated, but I won't go through that. Let me just bring in. So, that's it basically. When I talk about simple, I do mean simple. Don't overcomplicate things. I like moving averages, and I like, which one? Let's just bring up this one, because this was so can everybody see that black chart? Sorry, white and red candles on a black background. So this is the Dow trade that we took yesterday on the close, the energy. So how did it fit with my system? Well, it clearly broke the white. Here's a Bollinger Band as well. I didn't mention Bollinger Bands. The Bollinger Bands are always on as well. Sorry, I should have put that on. Bollinger Bands also. Okay. So look, the daily candle closes at midnight server time. Okay. And then it'll start bobbling about here. So the reason we took this trade, once it bounced off this fractal low, 2, it had broken through significantly through, breached and broke. See when I say breached and broke, through this white line here, which is the 20 period moving average. So lots of energy. Okay, just from a pure technical point of view. The other thing that attracted me to this particular trade, it was at this key sort of pivot point here at this 12, I think it was 20,800. We got in at 50 pips earlier, but 2 fractal lows, 2 fractal highs, sort of zone area. So it's looking like lots of energy. The parabolic saw had flipped, and more importantly, it was more to do with the sentiment and what was going on in the marketplace. And so it wasn't just a pure technical trade and a system trade. The system was saying go, but the fundamentals were also saying go. We'd had this move from risk off to risk on. So stocks were going up, gold was going down, oil was going down, the yen was going down, Swiss franc was going down, all the risk off candidates. So risk was back on in the market, so people were buying stocks. And once we got this energy, history tells us once it gets higher, it goes higher. Okay, because my system, my trend following system, wants to be in with a trend that's going up rather than trying to catch a trend that's, trying to go short when everything else is going long. So go with the trend, and that's when the multiple time frame comes in. So what's the monthly time frame saying? Well, the monthly time frame, the higher time frame for me for that, well, it's on this daily. So the weekly is still strong, even though we've had this dip down the last 6 weeks. Monthly is certainly still strong. So monthly, big strong uptrend still. Nothing's really changed that. People talk about being overbought, but it tends to, again, history shows us it keeps going once it gets going. So the momentum is clearly up, isn't it, here? All the way back to 2009. So bull market. And again, if you read the Jesse Livermore book, excuse me, there's one of his old traders when he was very young just says that, yes, we're in a bull market, So energy was to the upside. So that was 3 or 4 boxes ticked. Thank you, that's enough for me. And off we went. Do you use daily candle time frame always? Yeah, Libby, yes, mostly. For my personal trading. I also have a 4-hour system which I'm starting to talk about and write about here on the web page, and that's equally applicable to perhaps a 1-hour time frame as well. Okay, but obviously, the lower the time frames, the lower the stop loss, the lower the target. But there's more trades and it's more churn as well. But obviously, for my own personal trading, I'm at work most of the trading day, so I'm not actually trading in that sense. Okay, so I hope this makes sense. In which time frame do you enter into a position? Cowell, well, it's based on the daily time frame. So here, let me just go back. I'm not quite sure what your question means there, Cowell. But here, it was just that this 727.50 was just the price I got filled at when I placed the trade. This one here, so it actually closed a wee bit higher than that on the close of the day. It closed at 20,764. But I didn't actually get filled. The price I got was 20,750. Okay, so that's on May. But obviously here again, this is a good example. My first target was here. The second target is off the chart here. So target 2 is up here at 21,300 because it's beyond the existing high, and it's beyond the existing fractal, so it'll have some energy. And if it gets to that one, it'll probably keep going. But again, it's a big psychological round number, and the stop loss would have been down here somewhere on here. So again, if you're looking at, this is a good example of the risk reward not being great. So see that I was prepared on this trade to lose that amount. Let me just put a line in, actually, it might be easier. Stop loss would have been down there, so I was prepared to lose that amount to gain that amount. So the trading books would tell you, and I would tell you if you're completely new, that's a higher risk, isn't it? Because you're risking that amount to win that amount. But as I say, my system over time has proven to me that some of the bigger stop losses tend to have the most energy going back in the other direction. So although it was only like 2 candles into this return move, it was such a big gap up move. It was strong enough for us to take a fairly close target, and the 14 period ATR is just that. Let me just put that on for some of you that were asking about the ATR as well. So insert, it's simply an indicator that comes under the as an oscillator. So it's this one here, the average true range. Okay, and it defaults to 14. So basically, what it does is take the last 14 periods of the chart that you're on. So in this case, 14 days, and plots it as a chart, as a line chart below the graph. So here, so it goes up and down as the last 14 days goes up and down. So it's gone all the way down here. See how it's low here for this period, because these candles are very solid. These taller candles here caused it to start rising. So when we got in here, I think the 8 hours about 194 or 180, I think it was. So it's 180 something. No, hang on, that day it was, wasn't it? That one there, it was 100 and yeah, about it says 184 now. I'm sure it was about 180 when we did it. So I looked at that 180 for the 14 period ATR from 2,700 took to about 2,950. 2,950 for me at about around 200 was very close to 21,000. So it made sense to push it out a bit to 21,000. That's quite often what I do. So that's a little less non-discretionary. It's just me adding a bit of common sense to it, because the size of the market from the few more pips to 21,000 from where it was going to get to, I thought, isn't that far, and it was likely to get there because of the psychology of the number, the round number. You'll see that written down all the time when you read different analysis talking about trades. Okay, so that's it. That's all I do. It's as simple as that. And not because I've been doing it for a long time, but the most important thing is what I said at the beginning. It's all about knowing you. Let me go this bit here. It's all about knowing you, okay, and accepting a loss. I had many losses. I've emptied many accounts, okay, because I've got too greedy. When I started, I always wanted to be right. That was the one thing that was the big step forward for me when I got off first base, was realizing that I didn't have to be right all the time, and it didn't matter. I like being right. I'm a bit of a know-it-all. I'm a bit of a pain in the neck, to be honest. But that's just the way I am. It drives my wife mad most of the time, but unfortunately that's just the way I'm made. But once I realised that that's what I was like, I took a step back, and that's when that helped me hit a home run and get all the way around that baseball pitch I was talking about at the beginning. Okay. Risk management, simple as that. Keep it to 1% of your account when you start, or 2%. The problem is if you haven't invested enough risking 1% or a small amount of your account means you've got to trade with micro lots. And if you've got a very small account, you can't trade more than 1 or 2 micro lots, so you're not going to be able to do the 1 or 2 target levels. Well, that doesn't matter at the beginning. Just get used to trading. So go back to your demo account, get comfortable, get consistent, then save up and invest as much as you can. But don't invest money that you're not afraid to lose, because that will add to the subconscious problem about losing. And you can't, if it's money you can't afford to lose, be careful with it. Okay. This is another question just coming here. A couple of questions. Please do another example. Okay, that's not a problem. Somebody pick a number. There's 9 charts on it. Somebody pick a number between 1 to 9. First person, don't pick 8 because we've just done the Dow. Somebody key in a number. Aussie yen. Okay, Aussie yen was first. How do you use ATR on TP2? Babak, I don't really, to be honest. It's more of a psychological level. Let's just have a look at Aussie yen. That was the first one. So Aussie yen, that's another good example of what's going on here. Why have we got a blue line? Oh, that should be a red line for the stop loss, not take profit. So this was this a trade we took the other day? I think it wasn't it? 83.16. Yes. So again, similar sort of principle to the Dow trade. So it's a bad example because it was at the same time. But we've had a big move down. Can everybody see that, by the way? No, the screen takes a bit of a time to rescind. Cowell, you keyed in Aussie/JPY before anybody else keyed in a number. It's very interesting, very quick. So here we've had a move down under the 20 period moving average. So it moved down, it bottomed, parabolic stars was nice trend down. The fractal highs were down. Parabolic stars were still up here, so it's still staying down. And all of a sudden, we'd had this jump up, and again it broke through, although it closed the day below the 20 period moving average, because of the energy that's required, because of obviously this is a fundamental issue with the news about the French election, and it triggered the risk on rally. Again, just like the Dow position, it was strong enough for me to get in, and again, although it closed here, I got in on that particular trade a wee bit above the close price of 83.16. Again, let me just insert that 14 period ATR again. It's not actually on this oscillator. Average true range. Okay, so let's bring up that so you can see that. So this is our entry day here, Monday. ATR was on that day 8.85, whatever it was, 8.85. 0.86, something like that. So 83.16 plus 85 takes us to a little over 84. Why did I push the target up to 84.20? Well, it was when I put the ATR on, it came a wee bit there, and that was that was a support area here. That candle there, those two there, and it goes back to this congestion zone here. So that was the key one here. Back in December, this is a little bit of a support area that it bounced off when it went higher. So it's likely, or probable, as I say, I look at probabilities, to get to this area again. Okay, and if we'd put on that was enough for me to get in. But if we'd let's put on my other old favourite, the Fibonacci levels. So put the Fibonacci levels and look at that. My target is a bit above the 38.2. But look what's happened today. You think I'd made this up, wouldn't you? Look at how that's smacked right in to the 38.2 Fibonacci level, and that's again why I like the Fibonacci levels. The other thing people say about the Fibonacci is, where do you start? Where do you go to? Well, it doesn't matter. If this is the screen, this is your range you're looking at. Where was the last high? So the last high was there, the latest low was there. So stick it on, and it'll produce something for you. So it gives you this confidence. So it might be that target is a bit too high for this particular run up, because we went up, went down, we had a good day yesterday, we got up to there today, hit the Fibonacci and come back down. So who knows, it might be a wee bit too high, but we'll see. It's early days yet, isn't it? 2 days into a daily trade. And that's the other thing you've got to accept as well. on the time frames that you trade, you need to accept that, on the daily, if you're trading off the daily candles, it could take 2 or 3 weeks to get to target. Typically mine are done within a week or so, but you just got to accept that there will be costs, there will be swap charge. That's the other thing about trading intraday. There's no risk of something happening over the weekend. There's no risk of something happening overnight when because you've closed your account, you've got no exposure in the market. But for me, that's just something that's part of the risk of trading, part of my risks of trading. So anyway, when you set to take profits, do you close the trade and re-enter after it hit T1, or you do trail a stop loss? What I do, again, this is just what I do. As I said at the beginning, so when I entered this one, this was only got one target, so there isn't two on here. But what I typically do, because again, let me say this again, because it's on the daily candles, I'm not that hung up about getting in at exactly the pip level, okay? Because I know it's going to move quite a bit. You can't do that if you're trading intraday, if you're only looking for 5 or 10 pips on your trade, so you only have one target. So I will tend to open 2 trades, one for 8 to take risk 80% of the, or get 80% of the move, and one for 20% of the move. So I'll open 2 trades typically, but don't worry too much about the two targets. Okay. Another way of doing that is to just open 1 trade to target 1, close it all, and then reduce the risk level. So if say you took a whole, let's go back to a lot again. If you use a whole lot, 1 lot to get to say the target 1, the next one might only be 0.2 of a lot, or just take 1 trade at 0.8, and if it gets to target 1 and it looks like it's got the energy to keep going, because quite often what happens with my T1 and T2 trades, it gets to target 1 and then it retraces again. Sometimes it retraces all the way back past the entry point, and I'll tend to close them out at that point, although it's not a definite given. I don't do that all the time, but about 90% of the time I do. So sometimes we will enter here, get to target 1 quite quickly, and then retrace, and then sometimes retrace past where we got in and go down here before it then gets the energy again to go all the way back to target 2, which may be up here or something. So it's how you trade that again, and how you deal with that. But if you're new, if you've got a limited account, don't try and overcomplicate things by getting to target 1 and target 2. Just try and take the target that's closer. All about managing risk, and then get more confident and feel the system, feel the flow, because the market, especially the forex market, it never stops. It's always going. Very little gaps on here. See this? This has gone all the way back to November, and the only gap we've had was the crazy news from the French election. If you're trading stocks, you'll see this all the time, gapping every day. Let me bring up a US share, for instance. Oh, hang on. Shares, where's the shares gone? US share. So bring up something like Apple, and you can see this is on the, this is the 1 hour chart, but even on the daily chart, Apple can gap around quite a lot. No big gaps all the time. Don't get that with forex. Well, say you don't get it. You've got it on Monday, but you very, very rarely get that as gaps. Okay. Okay, how far back should one go on a chart when asserting support and resistance? Well, Cello, again, it's up to you. How your time scales. I tend to default to the screen size. So on this one, for instance, let's take all these indicators off and clean it all. Hang on, and clean it all up. So object list. So let's get rid of all these lines. Why didn't that work? Oh, delete, that's fine. I don't know what to do that. Empty file drives me mad sometimes. Close. Right, so how far back do you go, Cello, you've asked? Well, manually, you'd look for, get your line, and where's the support and resistance? Well, look at that. It's sort of around there, isn't it? So I'd put that on there. And where does that leave me? 85.35 or 35. Oh, there you go. That's a round number. So, sorry, we've got a sort of support area there. No, it's a bit higher than that, shouldn't it? So, and look at it, sort of coinciding with some fractals as well. So 85, and look, it's close to the 85 number. There's another one there. So it depends. Obviously here on this particular time frame, that's our high. Okay, so that's a resistance level. There's a stronger one a bit lower down, isn't it? Because that's the previous high. So it's there. That's a really strong resistance, wasn't it? So again, so what's happened here? It's a classic little move here. So this has been resistance. The previous resistance was down here, so it's stretching. But it 2 days ran out of energy, came all the way back down, and it hasn't got back to it once, twice, 3 times. So it's failed, and off it's gone. So that's a failed breakout, if you like. Another really good example of that. So it's kept going. That's its peak. Obviously, we don't know that at the time, and again, it's easy to look back on charts and put this analysis on, but the trick is to look at what's going to happen going forward. So, really good example there. 1, 2, 3, and it's failed and it's dropped off really badly. So, this zone here for me is obviously some congestion zone, so we could be going back to it. And then look at the bottom of the zone is around the big psychological number 85. You know, simple as that. So has this been overbought, oversold? Well, it's suggesting it may have done. Technical saying, well, a bit, but strong to go up. So we could be back at a new level here around about. But where does that level go? Oh, look at that. See what's happened again there? Where we are now takes us back to where we were back here. So if the last 3 days we haven't broken above this level, so this could be our resistance level at 83.65. So if we get over here, we could be back into our zone to 85. And that's as much as I would do sell out, to be honest. What is the purpose of fib in this chart? Libby, I put the Fibonacci on just to confirm or see where the levels are. That's all. Sometimes I use it, sometimes I don't use it all the time. Okay. Please, can you do 4-hour example? Okay, same principle. So, beauty of this now is we've got these lines on that we've identified on this particular chart as daily support and resistance levels. So if we go down a level to the 4-hour, we can see that the 4-hour will have trouble getting to this 85 because it's a higher time level, resistance level. So here on the lower time frames, we've got resistance around where we are now, and that's what we were talking about the daily level. We've got resistance around sort of where we are now, or where we've been in the last today. So that has created a nice little peak top. So we've got this fractal form, so we're down. So again, you wouldn't go short on this one yet on the 4-hour until it breaks this 20 period, I would argue, because it's been strong from the big gap up we had earlier in the week. We're above the 20 period here. So off we've gone. We've come down a bit, but support there. See how that support, the low is the high, and it's above that fractal there, so it's still strong. We need to break this one. So the principles they're saying, the beauty of technical analysis, everybody, is that it's applicable on all time frames. Some indicators are better than others at different time frames, but most of them can be applied to most time frames. Okay. I always hear people say when there is a gap you must buy or sell to the original point to close the gap. Is that true? Gaps tend to get closed, Fundo, but not always. That doesn't really answer your question, does it? The issue with trading gaps is that it's easy to look back at charts and say, oh look, that gap got closed, but when do you get in? Okay, so this is a good example. So here, and where's the gap? Where do you measure the gap? Some people say you measure the gap from the bottom of the candle to the body of the candle to the body of the candle. Others say, oh, well, we can take the wicks to the wicks. So the gap really is probably from about here to about here. So has it been filled? Well, no. But how long? Where do you get in? How long do you hold your trade for? So you could say, if you were going to short this position, let's say this. This would be your first target, wouldn't it? Round about here. Okay, so it's had one go at it. So you could argue, well, this could be a target going down. So it may be. but we've had 3 down. Are we going to have the energy to go back down? Well, I don't know. Why did this go up? Okay, why did this go up? Well, it's a weak yen that's caused this risk off. So that's not going to break. So to get back down here, you'd want this to break and breach. And this is what a lot of gap traders will be looking at. They will, on the 4-hour chart, on this 4-hour chart, for instance, we want in this 20 period to break, and then their target would be here. So again, if they got in here, or say it was about here now, in the next 4 hours or whatever it is, their stop loss would be up here, and their target would be here. It's not something I do. I've tried it in the past. It's different things. Different things for different people. I'm very much, it's on my system. I'm very much trend system, energy based, and that's what works for me. So yeah, to an extent, it's true, Mafundu. Okay. Any more questions? Anything else you'd like me to have a look at whilst I'm here? I'm happy to keep talking for a little while. What time is it? Oh, it's 3 o'clock. I do actually need to go because I've got to go and pack for my trip. Okay, so hopefully that was helpful. I hope it made sense. It's there's a rules bit, but it really is all about you. So you need to clean sheet of paper. Can I accept a loss? If you can accept losing, that'll be fine. Euro dollar. Okay, one last. I've run over time, but one last. As you asked so nicely. One last currency pair. Everybody talks about it's the most liquid and it's the most highly traded. So let's have a look at it. Be quick. It's not on here, is it? Euro. I can't find it quickly. I'm not having a look at it if you don't mind. Euro. Where is it? There it is. No, it isn't. Euro. Okay, it's a white one. This one, not a black one. Okay, so daily. I don't know why these. I don't know what these lines are on here. Oh, there was 11. This is euro dollar. So, what's this telling us? Well, this is looking quite positive. Euro again, the jump up. RSI's jumped up to 30s, rolled over a bit, but it's strong. So it's back to this key. This was a key pivot area, or the key target 110, and it's looking like in the longer term. It will perhaps have a go at that if this continues. However, obviously, that from the looking forward here, we've got the ECB announcement tomorrow and statement. More importantly, today we've got Trump's tax announcement. But that's already been leaked out quite well, and it's already in the market. But there's still probably some energy in that. So the general weaker dollar, more positive news coming out of the euro area. So 110, another big psychological round number. If it holds over 109, we're a bit under 109 at the moment, but we've had a big rally. It may need to cool down a bit before it gets to 110, but 110 is very much in target level. So not so long ago, 105 and 150 was the key pivot points going down, and people were talking about parity and below parity. It was always looking very weak. That's sort of turned around for now, but we'll see. We'll see. The next big fundamental thing for the euro is the final outcome of the French election. If Macron stays above sort of the 60% level or keeps 20% ahead of Mrs. Le Pen, that's already happened and built into the price. And any issues with the German election in September is the next big fundamental thing, but that's a few months away yet. We don't need to start worrying about that yet. We've got the summer to get through first. Okay, so thank you for your time today. I do appreciate spending your time. We're here to help. This doesn't cost anything. Any questions, email us at seminars@hotforex.com. Stick them in the question box here. Let me just quickly run through this. It's a bit more detail what you don't need to go through. I was trying to get to the. That's a seminars for next week or later this week. So I'm leaving today to go to to Lagos in Nigeria on Saturday. There's a seminar in Nigeria on Saturday. Now we're going down to South Africa next week. Cape Town, Durban, and Johannesburg Tuesday the 9th. Okay. If you can you explain us the margin? You mean margin, Cowell? Yeah, margin. I can't, unfortunately. Watch my video I put together on margin.